Video for the stock market, and I have a lot of information and I have not a lot of information. Let's just get into it. Before I forget, hey, you like this? Definitely subscribe, do a thumbs up, and share. I really appreciate it. I really like just to talk about the market. I really love sharing about the market. Well, today was a confusing day because I had a lot of mixed signals and I sort of messed up on a little bit of mixed signals and I had to correct my signals very fast. Well, I will get into this. And we are seeing that the CPI is showing is still really high. Yesterday, if you watch my video, I was talking about that, and I explained about the CPI still is really high, and I was sort of expecting that. Well, the Michigan University came out and talking about how that pretty much a lot of people are not spending money. There's a lot of people not going to spend money. And this is a reality. Like, when people are not earning more money, they're not going to spend more money. And that is a thing that I basically was wondering, how is everything going up when we have to see when everything is basically people are tightening up. So we seen right during the market, it shot up, boom, and we can see that. Let's get into this. And right here, I got a strong signal, and it goes through the trend. And I was like, wow, this is insane. So you know what I did? I bought some longs. I started buying some longs, and I started right in here leveraging and hedging my shorts. And why I'm leveraging or hedging my shorts were basically because I got that long signal, and that was one of the signals. Where is it? I am looking for this brush. Here, I got that long signal right there. I got this signal, boom, right here. I got, and it started testing up, and it started coming back down, testing the support line. So what does it do? It tests this support line right here, and it shoots back up. And I'm thinking, okay, it's going to go up. Well, I was totally wrong. And once it broke this line up here. Delete. We're gonna see this. Once it broke right into here, this support line, and I seen this B coming right back, and it's breaking this line, I was like, whoop, I messed up. I covered my hedge onto my shorts, and I hedged my long. What the heck is wrong with me? And so I had the long going up, buying right in here. Then I hedged my longs right in here, and I started piling. Once it broke down to here, like I said in my previous video, I even talked about this in my previous video, saying if it comes back down to this point right here, this support line, and that was at the 362, I'm buying more shorts. And I started loading up on more shorts. And I started loading up more onto it. And to make it even more powerful, we see it coming down, bouncing up, testing that support line, making sure that support line is actual value. Then it starts breaking down even more. That, to me, is the bears are in control. I'm sorry to say, the bears are in control. You see this right here showing that these are bull trends, but you come right back up here and you can see how the bears are in control. The bulls are piling in, and you can see there's more more buying pressure right in here. Buying. They're just buying pressure. There's not enough buying pressure, and the bulls have no control. The bears are in control, and it's just piling down, and it's coming right down, and you can see it coming down, and it's coming down. So what is going to happen? I think there's going to be more downtrend next week, and I'm glad I'm glad I did not sell my shorts. I did not cover because I thought this is not making sense. This is really not making a lot of sense. But what I did is hedged onto my longs. So I had my longs coming in there. And the longs, I should have never bought them. I wish I never bought the longs. I might sell the longs back out there if it comes back up a little bit. But at least I have a hedge onto if it starts moving back up again. That's why I'm looking at it. I'm majority on my portfolio is pretty much downtrend, all shorts. And I do not see where the market is going back up. In the morning, this is another tricky one. That was basically my support line was at 362. It broke through that. I just went over that. Well, this was long in the beginning, so my daily candle was long. The RSI comes back up. This is not a good thing. The RSI is back up, and we have to realize when the RSI is back up on this level, and it was a bloodbath today. We had more buyers coming in, and the RSI was up higher. This means there's going to be a hard drop, and the bears are just going to swipe this one very hard. So, just letting you know, we are going to see, I'm predicting, and what I'm thinking, we're going to see another coming right back down to this area. So, and this will be a perfect bounce. I would say right in here, this is where I've been basically planning is the 340, because this has no resistance right in here. We're not going to see. Once it gets past, it is 350. There's nothing going to stop it until it hits around to 340. That is going to be a bloodbath, and I'm just letting you know what's going to happen. I think the VIX. Looking at the VIX, it started way down here. It was negative. It was in their 20s, and it just started skyrocketing. Once I seen the VIX going up, I seen it breaking through this line of it was support. Now the support is gone. This is not any more support. Once I seen that, I started realizing, yup, it is verified. We are going to see a very bad day. And we can see it was a negative 2%. Now keep in mind, yesterday we seen a negative 4% right off the bat of the bell hitting that. Bing! And it went driving down. And it jumped right up, back right up here. Let's see if I can get in there. And it jumped back up. And the shorts were basically, they were covering. And I was wondering about that. You can see it coming right down, hitting, coming right back up, finding that support, and you can see it was driving right up. Shorts were covering. There was a person, I was watching their video, I forgot whose video was, but they had really, they were talking about how the puts, there was a huge bank that bought a whole bunch of puts, and they basically covered those puts. Well, those puts were pretty much the majority of the volume. And that would make sense. The majority of the volume was probably a whole bunch of shorts covering. And when shorts cover, you can see it shooting back up because they gotta buy back into the shares. They gotta buy the shares back. And that is the honest truth, is the shorts don't want to. They want to stay on them for a little bit, but they want to get out of them because the time delay onto a short, they have to pay interest on it. You know, that's the honest truth. So the CPI was bad. The Michigan report, that was bad. We even have the Fed coming down to, the Fed is running out of money. They don't have any more money. This is bad as well. There's not any, I don't have any good news onto the economy. There's nothing good on what's going on with the economy. We can see there's nothing that's coming out. What am I investing into? I'm investing into this ETF. And this is the one I am investing into. It is a great hedge on, you get a 3 times the amount. So whatever is going on, it's 3 times. So you can see it was a 2% negative, you were at 6% positive. This was 3 times the amount. This is a good one to invest in. You are not going to lose all your money onto this one as if you basically go out and short it. Meaning, when you short, you have the chance of losing your money plus more money. This one is basically whatever you put in there, you could lose, and that's basically it. So I advise people just to do this. This is the best one. It's really good. Another one is I do put in is this one. Is a great this is another one. It's really great to invest into. So when times are tough, these are great ones to put your money into, because you're getting a 6% back. You're getting a 1% back. This is after hours. Now, I prefer the other one because you're paying a little bit less onto the interest. So the interest onto that is the cost to keep it. That is the reason why I basically go to the other side, and I like to sell the options out to the market as well. So this one's a little bit more active, and I can sell it out to the market. Here you can see the expense is 0.9, and we can look at so the expense is 1.0. So it's a little bit cheaper on the other one. That's the reason why I prefer onto the hi Adam. I'm making a video. So it's a little bit cheaper to go in here, this one, because you have a little bit cheaper. Sorry, my boys are coming down here. They so I prefer to basically to use this one. Now, what else am I looking at as well? Hedging into the market is the other one is the IP. I'm trying to. This one is a great hedge into the market. Why? Is because you get a 15% dividend. This stock really hasn't moved much, and for how volatile the market is, this is a great stock to get into. I love the guy who the portfolio manager on this. He has been in the market. He has understand the market, and we can sit there and see on how volatile the market is. He has still in a range of the negative. It was at $43 on the top of $54. You're getting a dividend of 15%. This is a great way to hedge into. So those are the ones that I'm basically putting in is hedging. Even the oil is another one. USD, I believe it's USDS, or this the oil one. I know there's people talking about up here, US oil funds, and oil I think is still going to go up. We are going to see oil going up because OPEC is basically saying we are going to smother United States and try to drain them out as much money as possible. And to hedge this, I would recommend, and this is the one thing, is the USOI. You get a dividend onto this as well, and it's a great one to make dividends off of it. So I have these are the ones that I'm basically putting money into. I just want to verify these are ones that once people are going to be unemployed, there's going to be unemployment going up. We're eventually going to see that because you can see the Fed wants to do that. The Fed wants to tear the market apart as much as possible. The Fed is just like trying to tear the market as possible because they realize they have nothing else in their pocket, and the only thing they can do is to tear the market. So downtrend, I am sorry to say, downtrend, hedge yourself and be aware where we're going to be going. Now, will we stop at 340? I don't think so. I think it might just rebound from there. I thought we were going to have a rebound rally coming up, but we did not. So that said, basically, that is the whole market. And I was trying to get into here an Ortex and look at everything, but it seems like Ortex is having issues and I'm not having anything. And then so like it, subscribe, and make some money out there.